Hi, welcome to Accounting Prog. In this video, we'll show you how to record utility bill journal entry in accounting. When a company receives a utility bill of 10,000 rupees, the journal entry is debit utility expense 10,000, credit accounts payable 10,000. Now, if the company pays the bill immediately in cash, the entry is debit utility expense 10,000, credit cash 10,000, and when the earlier credit bill is settled later, the entry is debit accounts payable 10,000, credit cash 10,000. That's how you record utility bills with both cash and credit payments.
Welcome to Accounting Prog. Today we'll learn how to create a chart of accounts, the backbone of your bookkeeping system. A chart of accounts is simply a structured list of all the accounts you use to record business transactions. It's divided into 5 main categories: assets, liabilities, equity, revenues, expenses.
When creating one, start by grouping accounts logically. For example, assets, cash, accounts receivable, equipment liabilities, loans, accounts, payable revenues, sales, service income expenses, rent, utilities, salaries.
Each account is often given a number for easy tracking, like 1,000 for cash, 2,000 for accounts payable, and so on. A well-organized chart of accounts makes financial reporting accurate and simple.
That's how you set up a chart of accounts. Follow Accounting Prog for more short and practical accounting tips.
Welcome to Accounting Prog, your one-stop guide to understanding bookkeeping and accounting, step by step. This is episode 1 of our Bookkeeping for Beginners series. Today we're going to learn what bookkeeping really is and why it matters. Bookkeeping is the process of recording all financial transactions of a business. These transactions include sales, purchases, income, and expenses. It's like keeping a financial diary that shows every rupee your business earns or spends. For example, imagine you run a small juice shop. Every time you buy fruits, pay wages, or sell a glass of juice, you note it down. This is bookkeeping. Why is bookkeeping important? Without bookkeeping, you won't know how much you're earning or losing. It helps you track profit, manage expenses, and stay ready for taxes. Bookkeeping is the first step to managing your business smartly. Whether you're a freelancer, shop owner, or small business manager, proper bookkeeping gives you control and clarity over your finances. Let's look at Ariel Life example. Imagine this. Total income, Rs 1,000. Total expenses, Rs 600. So, your profit is Rs 400. Simple, right? There are 2 main ways to do bookkeeping, manual and digital. Manual means using a physical book or Excel. Digital means using software like QuickBooks, Zoho Books, or even Google Sheets. What's next? Now you know what bookkeeping is and why it's important. In the next episode, we'll cover the key bookkeeping terms like assets, liabilities, income, and expenses. Episode 2. Bookkeeping terms. You must know. Don't forget to like, comment, and subscribe to Accounting Prog for more simple and practical tutorials. See you in the next episode. Double entry bookkeeping is a fundamental system used by businesses to record financial transactions accurately. It follows a simple principle. Every transaction affects at least 2 accounts, ensuring that the accounting equation stays balanced. The accounting equation forms the foundation of double entry bookkeeping. It states that the total assets of a business are equal to the sum of its liabilities and equity. Let's break it down further. Assets represent the resources owned by the business, such as cash, inventory, equipment, and more. These are valuable items that contribute to the company's value. Liabilities, on the other hand, represent the debts or obligations owed by the business. These can include loans, accounts payable, or any other outstanding payments. Equity is the residual interest in the assets of the business after deducting liabilities. It represents the owner's or shareholder's claim on the company's assets.